When we talk about a country's currency, what makes it strong? Is it just the economy? Or is there something else, something quieter working behind the scenes? For Iraq, a nation defined by its vast oil wells, historical conflicts, and the ambitious rebuilding, a powerful, silent guardian has emerged, its foreign reserves. As of 2025, Iraq's foreign currency reserves are hitting some of the highest levels in its modern history. This gives the Iraqi dinar, the Iqi, a foundation stronger than it has seen in decades. So, what exactly are these reserves? Why are they so important? And how could Iraq's growing financial cushion shape the dinar's future? Let us dive into the quiet but critical role Iraq's foreign reserves are playing in its economic destiny. First things first, what are foreign reserves? Think of them as a country's emergency savings account, held by its central bank. These savings aren't just in local currency. They're in powerful foreign currencies like US dollars, euros, and the pounds, as well as gold, bonds, and the other stable assets. They serve several vital purposes. They help stabilize the national currency when markets get turbulent. They pay for essential imports when export income suddenly drops. And most importantly, they back the currency's value, giving investors the confidence they need. In Iraq's case, the Central Bank of Iraq, or CBI, uses these reserves to keep the dinar stable and manage the daily pressures on its exchange rate. So, where is all this money coming from? For Iraq, the answer is simple: oil. Oil is the lifeblood of Iraq's economy, accounting for over 90% of all government revenue. When oil prices are high, Iraq earns a flood of US dollars from its exports. These dollars are then safely stored away by the central bank, growing its foreign reserves. Between 2023 and 2025, Iraq saw a significant surge in its oil revenues. This was driven by a combination of factors: rising global demand for energy, stable production levels hovering around 4.3 million barrels per day, and the strategic new energy deals with major partners like China and India. As a result of this boom, the CBI's foreign reserves soared, reportedly crossing the $100 billion mark. This is a record high, giving Iraq one of the most robust reserve positions in the entire Middle East. This massive financial cushion makes Iraq far more resilient, capable of defending its currency from inflation, unexpected economic shocks, or volatile swings in the global market. But having a lot of money isn't enough. You have to manage it wisely. And this is where the Central Bank of Iraq has truly shined. The CBI has been playing a strategic long game, not just growing the reserves but managing them effectively. One of its key strategies is maintaining a managed exchange rate. Through regulated currency auctions, the CBI controls the dinar's value against the US dollar, preventing the wild swings that can cripple an economy. Simultaneously, Iraq is slowly but surely working to reduce its dependency on the dollar. The government is encouraging more domestic transactions to be conducted in dinar, a subtle but crucial step toward economic sovereignty. The CBI has also been diversifying its assets, increasing its gold hoardings. Gold is a classic safe haven asset, acting as a powerful hedge against inflation and the global currency instability. Finally, Iraq continues to strengthen its partnerships with international bodies like the IMF and the World Bank, ensuring its financial practices meet global standards. These smart moves ensure that Iraq's reserves are not just growing, but are also liquid, diversified, and secure, protecting the dinar from any potential crisis. So, how does all this directly support the Iraqi dinar? The connection is crystal clear. High reserves translate into real-world benefits for Iraq's currency. First, it builds investor confidence. When foreign investors see that Iraq is sitting on over $100 billion in reserves, they view the dinar as a much more stable and less risky investment. This attracts capital and encourages long-term growth. Second, it protects imports. Iraq can comfortably pay for essential goods like food, medicine, and technology, even if global prices spike or its own oil revenue temporarily dips. Third, it provides a powerful tool to defend the exchange rate. If the dinar comes under pressure, the CBI has the firepower to intervene in the market, buying or selling currency to maintain its target value. And finally, it helps manage debt. Iraq can meet its international loan obligations without having to borrow more, preserving its national creditworthiness on the world stage. In short, strong reserves make the dinar stronger not by artificially pumping up its value, but by protecting it from collapse and instability. To really appreciate Iraq's progress, let's put it in context. Compare it to its neighbors. Saudi Arabia, a global economic powerhouse, holds over $450 billion in reserves, but its economy is also much larger. On the other hand, a country like Egypt has around $45 billion, while grappling with significant debt and high inflation. Iraq, with its $100 billion plus, sits comfortably in a strong middle position. For a developing economy that has been through so much, this isn't just a number, it's a powerful symbol of growing financial health, maturity, and resilience. This brings us to the silent power of it all. Foreign reserves don't make flashy headlines like oil deals or new infrastructure projects, but they are the invisible backbone of financial stability. For Iraq, these reserves act as a silent guardian of the dinar. Whenever speculation arises about a currency collapse or a sudden, chaotic revaluation, the central bank can simply point to its massive reserve position as undeniable proof that Iraq is financially secure. Furthermore, these growing reserves give Iraq significant leverage. It can negotiate better terms on foreign investment deals. It can secure lower interest rates on any future loans it might need. And perhaps most importantly, it helps build public trust in the country's own financial institutions. As Iraq continues to expand its trade partnerships with countries like China, Turkey, and India, having this financial strength gives the government a stronger hand in negotiations and a greater degree of economic independence. Now for the big question on everyone's mind: can these reserves push the dinar's value higher? While strong reserves are crucial for stability, they don't automatically trigger a revaluation. A country's currency value is complex, influenced by everything from inflation to economic growth and political stability. However, what these reserves do is pave the way for potential appreciation over time. They create the right conditions for strength. If Iraq continues on its current path, diversifying its economy beyond oil, maintaining strict monetary discipline, and consistently growing its reserves, then the dinar could see a gradual, sustainable strengthening in the international market. Some analysts believe that by 2030, with its credibility restored and its finances robust, Iraq could be in a position to reintroduce the dinar more actively in global trade, all supported by this powerful foundation of foreign reserves. In conclusion, Iraq's foreign reserve growth might not be the most exciting news story, but it is one of the most powerful indicators of its national progress. In a region often characterized by economic volatility, Iraq's commitment to building this financial shield is a clear sign of responsible governance and a long-term vision for the future. The central bank's cautious, data-driven policies have paid off. The Iraqi dinar is now backed by one of the largest reserve pools in the Middle East. While speculators and short-term investors will always chase rumors of a sudden revaluation, the true story of the dinar's strength lies in the steady, disciplined build-up of financial power happening behind the scenes. In 2025 and beyond, Iraq's foreign reserves will continue to be the silent force ensuring the Iraqi dinar stands strong, resilient, and ready to compete on the global stage. Thank you so much for watching. If you found this deep dive interesting, don't forget to hit that like button, subscribe to the channel, and ring the bell so you don't miss our next video. We'd love to hear your thoughts in the comments below.